Your Highness, Your Excellencies, ladies and gentlemen, welcome to the Dubai FinTech Summit, and thank you so much for sharing part of your morning with us. Jenny Johnson needs no introduction in the world of global finance. Of course, Franklin Templeton is one of the largest asset managers in the world, with around 1.5 trillion US dollars in assets under management. Partners, partners and clients in around 150 countries around the region as well. So we really appreciate you sharing your insights and knowledge, Jenny. Welcome to Dubai. Thank you again.
Thank you.
So first of all, give me some insight into why it was important for you to be here today and help me understand a little bit more about Franklin Templeton in the UAE and around this part of the world.
Well, first of all, it's wonderful to be here, Your Highness. Thank you for the invitation, Your Excellency. It's amazing what you've put together here as a first round of a FinTech festival. Just to see the size of this event is tremendous, and I think speaks to itself. Franklin Templeton has actually been in this region. Actually, we were the first, I think, asset manager to set up in the DIFC, and you know we run our CEMEA business out of this region, out of Dubai, actually. And you know, for us, look, I'm third generation at Franklin Templeton, and so it's imperative that I'm thinking long-term about what kind of disruptions. I always say, you know, that I don't want the fourth and fifth generation to say we had a really good thing going until Jenny blew it and missed some great opportunity. And those opportunities are going to come, I think, from technology and disruption that comes out of it. And so, you know, being in the ecosystems where you are attracting that kind of innovation is really important. So to me, you know, obviously the region's important, and then the kind of hub here where you're attracting the FinTech talent, I think is where we need to be.
I think the governor made some excellent comments as well about the state of disruption and innovation, particularly in Dubai and around the UAE. It is happening at a pace now that so few of us actually expected. And I think that's really being reflected in the rise of consumer AI this year, which has been huge, the rise of ChatGPT, which I'm sure we've all experienced. What role do you think artificial intelligence and these new disruptive technologies are going to have on your business and your clients?
Yeah, I mean, you know, the interesting thing about ChatGPT, so obviously the AI and the innovation around it has been going on for a while. What ChatGPT has done is it has put it in the hands of the average person, just like the browser did to allow the internet to be accessible, and suddenly that opens up tremendous business opportunities. So I think we're actually at that inflection point. And, you know, I think in our business, there's as simple as, you know, you end up being more efficient at call service by having kind of AI bots that are answering questions. I was amazed to read that GitHub, which is a open source kind of programming platform, actually they have a ChatGPT Copilot, which is now writing 50% of the codes for the programmer, right? And so I just tried myself to say, I want to do a game, build me a program in such and such gaming, and suddenly Python code came out of ChatGPT. Now, unfortunately, I didn't really know what to do with it. But if you think about that in businesses where you can be so efficient when you have an idea and transforming that idea into code, I think is going to be astonishing. And then I would just add, I think, you know, we're 1.5 trillion, mostly active management. I think the ability to leverage the tool to gain insights on investment opportunities can be very important. And I think that any firm that wants to be a winner in the long run here has to be exceptional at understanding how to leverage this kind of tool.
So embrace it, don't fight it. Is that the message?
Listen, I'm a believer in all technology. You think you can stop it, but it's like water running down a mountain. It's going to get down the mountain. So, you know, the question is, and this is where I think regulation becomes very important here, the question is, can you guide that down? But I think it's important to embrace it.
I think we've already seen that this is really going to impact a whole range of units within businesses. For example, when it comes to finance, we're seeing it impact strategy, risk management. Obviously, there's a big opportunity on the cost out for these businesses as well. But what do you think it means when it comes to the future of advice? How could it potentially impact that part of the business?
So I actually think this is kind of an exciting time, you know, from a wealth for individuals, right? Because you know, over the last decades, as an asset manager, what do? We bundle products and we go out and sell a product. But what this layer of technology is enabling is true customization around that. We actually have a joint project with a company called InvestSuite, which is a robo-advisor in the region, where we're bringing our AI tool, which does dynamic allocation of portfolios based on goals. So if you think about, my individual goals may be, I'd love to have enough money to retire. I'd love to help my children pay for their college. And if things go really well, I'd love that second home on the beach. The first one is a must-to-have, the second is a nice-to-have, and the third is, well, if things go really well, like maybe I can get this. This portfolio and leveraging AI can shift your contributions to each category depending on the glide path that you're on. And when markets drop, there's going to be a point here where increasing your equity allocation is going to be important. Now, the timing of that's very important. But a lot of traditional models were very much fixed, kind of what they called 60-40. I think leveraging these tools, and AI is a big component of that, to dynamically switch up investment portfolios is going to be important. And then the ability to do things like tax efficiency and optimizing, and again, just customizing and then delivering that customization through ways in which traditionally, say, the unbanked couldn't achieve it. I think, the types of things that we can now do with our phone is going to bring very, very sophisticated investment tools that historically were just available to large institutions, are now going to be at the fingertips of the average investor, average consumer.
Wow. So let's talk about the state of the market. Let's talk about the global economy and what's going to happen next. What is Franklin Templeton doing in digital wealth and digital assets? Because one of the most interesting things I've seen over the last few months, speaking with executives and CEOs on CNBC, is the fact that we have seen this regional banking crisis in the United States, rising interest rates clearly pressuring those businesses. But cryptocurrencies have rallied through this. I think Bitcoin is up around 75% year to date, in fact. So how do we explain that and what's happening there?
So I tell people, I think the two biggest disruptors to any industry are going to be AI and blockchain, right? And then I follow it with Bitcoin is the greatest distraction from the greatest disruption that is ultimately coming to financial services and other businesses. And that is not to say that Bitcoin has no value. Actually, it was someone in this region who pointed out to me that, just the fact that the US confiscated assets from Russia would drive people into asset classes like Bitcoin because there would be a view that those assets could be outside of any government confiscating them. So I'm not saying that Bitcoin isn't going to have some value, but to me what's so interesting about blockchain and what is really unique is if you think about what the blockchain technology does, it does three things. It allows a payment mechanism, it allows a smart contract, and it allows a general ledger that is a source of truth. If you think about what happened, we were talking earlier about the regional banking crisis. One of the issues that happened was that as there became a lack of confidence in banks, in particular regional banks, they weren't able to access the Fed window because it was sort of after hours, right? So if you have a source of truth, and a lot of that is due to historically how operations and settlement happened in businesses. Think about, most big banks still have a big old mainframe that's doing batch processing at night. And so the markets were built like that, but as we become more global, it's going to be imperative that the source of truth, when the transaction happens, it is settled and you can have confidence of that. That is going to actually open up to a more 24-hour time zone. So I think that's going to be an important innovation. But back to the concept, I think for us as an asset manager, one is the source of truth drives down the cost, so we can deliver much greater customization for less, so that's a good thing. But it's going to unlock untraditional asset sources. And I'd love to use the example of Rihanna, the singer, who issued 300 NFTs, each one, and all she was doing was testing the market, but each one gave you 0.0033% royalty of one of her songs, right? Now, she's doing that because when she sells it, Rihanna fans are going to pay a premium. But the only reason that can happen is because that token can be, that smart contract can be embedded in, say, a music streaming service that can collect that fractional pennies and be able to pay you in your token. So think about the types of assets that can be unlocked. I think in this region, people describe to me there's a lot of capital tied up in infrastructure to support, say, the distribution of oil, right? And it can be sensitive politically to sell those assets. But if you could essentially tokenize them, then you could lease them and distribute the ownership, and maybe that's a safer way to do it. So what I think is going to happen with blockchain is not only is it going to help that customization, it's going to create efficiencies, but actually it's going to be unlocking some really interesting new investment opportunities.
Okay, fantastic. I also wanted to ask you, with regards to that regional banking crisis in the United States, one of the main debates happening right now is this concern and issue around accountability. Warren Buffett was actually talking about it just on Saturday. Do you think that technology and increased transparency can help to improve and safeguard these regional banks from things like this ever happening in the future when it comes to excessive risk-taking, for example, or poor management decisions? This all happened in the United States, but the technology wasn't there to add an additional layer of transparency and safety.
So I think it's important to...
Well, maybe it was. But
well,
yeah.
I think it's important let's remember, those bad assets were U.S. government treasuries, right? They were just longer dated. So, this was not a global financial crisis where you had bad loans and there was risk-taking. This was a fact that a regional bank went long U.S. treasuries. Part of that was because of the regulation that happened post the global financial crisis, where banks were almost incented to hold treasuries because the capital requirement was much lower. I think in 2020, when they went out on the curve, interest rates were zero. It was a way to get a return. So I just think it's important to sort of understand that construct around it. And essentially what happened is because rates ended up, and I think many of us in the financial services business, we're concerned about the unintended consequences of rates being raised so quickly. It's not necessarily that the rate level is a problem. Much of my life, interest rates have been at 5-6%. So, it's only been in the last really decade or a little bit more that they've been down to close to zero. And so I think the business models will shift to be able to adjust to that. It's just been the pace of that change had these consequences that have been devastating. And then, of course, the other piece of this was just the ability, which I think we didn't understand, that when depositors lose confidence, they can pull their money out so quickly that those asset liability models that traditionally banks use are suddenly not that predictive of what can happen in a crisis. And so I think that can be a bit of a challenge there.
Just finally on the US outlook, I've just finished a conversation with Bill Winters over at Standard Chartered. He says the Fed pauses from here. It's important for us because our currency is, of course, pegged. What's your view?
I agree with Bill. I think the Fed pauses here.
Okay.
I think they got to where they wanted to be. I don't think we'll see a rate cut this year. I think they'll ride it out for a while, and I think they'll be very data-driven, but they're definitely pausing from here.
Markets disagree with you. They think that a rate cut is coming. So explain that disconnect.
I think that it was easy to get inflation from 9 to 5%. 5 to 2%, it's going to be really difficult. So either they're going to have to adjust that target to maybe 3 or a little bit more. But what we're seeing is that the consumer is still pretty resilient. Unemployment's still really low. The economy is still pretty robust, and so it's going to be hard that you suddenly make that change in, say, the next 8 months.
And just finally on the UAE, this is a powerhouse economy. It's an absolute powerhouse economy, particularly post-COVID. Part of that comes back to good leadership, but also we've had an influx of new people here. Economic activity is really booming. How do you see growth playing out in the UAE, and what is the next catalyst for growth as the leadership here pushes on with the diversification plan, moving into technology, moving into financial services, and moving away from oil?
Well, to honest, I think we're sort of seeing it, and I think we describe it as, that it's been kind of reform, invest, and then transform. So the reforms that have happened have done two things, right? They have attracted human capital, right? So the visa requirements, those types of things, and I think Dubai in particular has done a great job at attracting talent in. And as a business owner, one of the most important things is going where you can find good talent, right? And so this is a place where people want to live, and they're attracting talent, and then the policies support that. And then the second is reforms around capital requirements and restrictions on capital requirements, foreign ownership, all of those types of things. Capital goes where capital is treated well, and so all of those types of things become, ways in which money comes in. And then I think it's, one of the things that I appreciate about this region is there is that generational thinking, which is, that at some point oil runs out or becomes less important, and so therefore, how are you diversifying economies to ensure that you are successful in generations out? And I think there's a lot of that going on right now. I think the IPOs that we've seen, UAE and Saudi Arabia really driving those in 2022, and still even in a difficult market in 2023, you're seeing that happen. I think all of those are indicative of that a desire to attract more capital in, and I think those are, the critical components of growth in the future.
Jenny Johnson, it has been an absolute pleasure to speak with you today. Thank you again for joining me on stage, and welcome to our region.
Thank you.
Please thank Jenny.